Hi, I'm Chuck Else with Osborne Partners Capital Management. Today, I'd like to discuss how important it is for investors to use a multi-asset class discipline when managing portfolios. As opposed to just owning stocks and bonds, multi-asset class investing consists of investing in numerous different asset classes that perform differently from one another in different economic and market environments. These include global stocks, bonds, real estate, natural resources, and alternative investments. There are a number of important benefits to using a multi-asset class approach. First, this is an investment philosophy that is typically used by large pension funds, endowments, and foundations. David Swensen, who manages Yale's endowment, was one of the first investors to pioneer this approach starting back in the 1970s. He actually built on work done in the 1940s by Harry Markowitz at the University of Chicago, who is widely regarded as the father of modern portfolio theory. What Swensen realized back in the 1970s was that as the world became more globalized, the correlation, or the extent to which stock markets around the world would move up and down together, would naturally increase. And he was right. In the 1970s, the correlation between the US and the rest of the world was about 75%. In other words, they were in lockstep about 75% of the time. Today, it's about 95%. So we looked for ways to invest in other assets that weren't correlated to the stock market, primarily investing in real assets, real estate, precious metals, and other commodities. It's also around this time that hedge funds really got their start, as managers tried to create strategies that weren't correlated to the direction of the market. We believe individuals should have access to the same sophisticated philosophy, but without the drawbacks that many institutions experience, including multiple layers of fees, low or no liquidity, little transparency about what you own, and no control over taxes. What makes multi-asset class investing the best discipline comes down to the lack of correlation among the various asset classes. By definition, some asset classes will do well in certain environments, and others will do well in other environments. By blending these together, investors are able to minimize losses in difficult times. And the key to long-term investment success is losing less when markets go down. After all, the deeper a loss you suffer, the harder it is to recover. If you lose 50% in a market downturn, you now have to gain 100% just to get back to even. So if you start with 1 million and your portfolio falls to $500,000, you now have to double your portfolio to get back to your original 1 million. It also gives investors the opportunity to truly diversify. And each asset class has a specific purpose in your portfolio. Here are a couple of examples. US stocks are a growth asset class. In other words, US stocks should be driving the growth in your portfolio, not used to provide income. US stocks are great as they provided the highest returns over the past 40 years, but they also carry the greatest risk, having fallen over 35% 3 times in the past 20 years. Natural resources, which include hard and soft commodities, such as gold and other precious metals, energy, and alternative energy, is an asset class that typically performs well in a rebounding economic environment and during periods of inflation. They also have appreciated in value about half of the time when US stocks go down. Natural resources go through periods of outperformance and underperformance and are negatively affected by a strong US dollar. Here at Osborne Partners Capital Management, we have used a multi-asset class discipline for decades. We're one of the oldest firms in the country, having been founded in San Francisco in 1937. We have a team of CFA charter holders who manage our clients' portfolios, and a team of CFP professionals who are advising our clients on a day-to-day basis about all of their financial needs. If you would like to learn more about multi-asset class investing, please contact us to receive our white paper entitled The Portfolio Management Discipline That Stands the Test of Time. You can contact us at info@osbornepartners.com or call us directly at 1-800-362-7734. Thank you very much for watching today.